Welcome to the Red Cloud Research Roundup. It's November 18th. We have a special edition of the podcast today. Our Fall Mining Showcase 2022 just wrapped, and the Red Cloud Securities research team is joining in on a roundtable to give you the highlights from this year's in-person event. We're joined by David Talbot, Managing Director and Head of Equity Research, mining analysts Taylor Combaluzier and Timothy Lee, plus our Senior Associate, Alina Islam. They're joined by Mark Bunting to dig into the highlights. Stay tuned to hear about top picks and which companies stood out most to them. Mark, kick us off.
Hello and welcome to the Research Roundup podcast. This is the Fall Mining Showcase Roundtable Edition. I'm Mark Bunting, the host of RCTV. Now, Red Cloud held its Fall Mining Showcase recently. It was very well attended. There was some excellent energy. We had 4 keynote speakers, 85 plus presenting companies, 25 plus RCTV interviews. Now, that is a ton of content, a cornucopia. And if you want to access any or all of that, you just have to go to Red Cloud's YouTube page or redcloudfs.com and knock yourself out over there. Now, as mentioned off the top, we have David Talbot, Timothy Lee, Taylor Combaluzier, and Alina Islam. Let's welcome them all right now. How are we?
Good, Mark. Thank you very much.
Yeah, this will be fun. So we're going to start with key takeaways from the keynote presentations. David, you gave the opening remarks on day one. Matt Watson, the founder of Precious Metals Commodity Management, he made a very compelling case for the need for battery metals. Not only that, the scarcity of many of them. So what was your takeaway as you watched that and moderated that presentation?
Yeah, absolutely, Mark. You know, I love Matt Watson's ideas, and that's one reason why we keep having him back as a speaker to the Red Cloud conferences. His 2 main messages, essentially the clean energy transition is underway, and secondly, the electrification of everything, except the world hasn't invested in mining yet. It isn't enough to say we're going to need more lithium and cobalt and nickel and copper, graphite, and all those critical elements for in the future. We need to do it. And there's going to be massive challenges as we try. So Matt suggested that EVs and renewables will use between 3 and 10 times more critical minerals than existing options. He also mentioned that over the next 30 years, more copper will be needed to be mined than has been mined since the dawn of time. That's a daunting thought, you know. Plus, we need to remain agile enough to be adaptable. You know, these battery chemistries, they're evolving. Right now, there's a shift to cheaper but less powerful LFP batteries. Plus NMC batteries, they're increasing in nickel but decreasing in copper content per unit. Although a rapidly rising number of units means that a lot more nickel and copper are going to be needed. Nickel and cobalt are going to be needed. So it comes down to having people realize that mining and electrification is the key to achieving emissions goals. And these issues are really going to lead to supply constraints, and that should really drive the commodity prices higher.
All right, very good, David. And I should mention that our analysts are going to have a few key takeaways from the company presentations that they did, and also a few top ideas. So you want to stick around for those towards the end. Now, Alina, your impressions of the keynote from Andrew Miller, who was the second keynote on day 2. He's the COO of Benchmark Mineral Intelligence. What did you make of him?
So looking at the demand for electric vehicles and where things currently stand, the biggest constraint for automakers is the battery energy storage, and more specifically, lithium-ion batteries. So currently, only 8% of Tier 1 battery capacity comes from North American sources, and this just shows us the sheer amount of work that needs to be undertaken to shift battery production to North American sources. Automakers are starting to wake up to this reality, so we're seeing more partnerships and JVs between these 2 sectors. We've seen partnerships between Tesla and Panasonic and General Motors and LG Energy. But you know, production of batteries continues to remain the first hurdle. An entire supply chain is needed to support and scale up battery production. And what we really need is more battery raw materials like nickel, lithium, and cobalt, which, might I add, are expected to be in deficit by 2030. Other hurdles include the location of where these raw materials will come from and how sustainably they are produced. But what it really keeps coming back to is that there will be a fundamental issue between demand and supply and the imbalance for critical elements. Every economist or research firm is currently predicting a supply shortfall by the end of the decade. So I think the point that Andrew was trying to make is that the mining industry is about to become the biggest bottleneck in the EV supply chain. And the reality is that the current project pipeline doesn't support the production of lithium, cobalt, nickel, and manganese that's required to support the EV demand that's coming. So, what I think Andrew was really trying to say is that focus needs to start shifting to the upstream part of the EV supply chain if any of the decarbonization targets are going to be met.
Alina, Piedmont Lithium is a company you're familiar with, right?
Yes.
So we talked to Keith Phillips, the CEO, at the event, and when you mentioned lithium just there, it makes me think of two things with them: the fact that so little lithium production is coming out of North America, and also and you mentioned the Inflation Reduction Act, that he elaborated on the fact that they're getting nearly $142 million from the government in terms of investment for one of their projects in the U.S. So clearly, that's a company that is looking to fill that gap that you're talking about.
Yeah. So Piedmont is one of them that we're seeing. They're more sort of advanced when it comes to their projects. There are others in the space, and I'll talk about this a little later. But companies like Brunswick Exploration that are leading more grassroots efforts. So we are seeing a host of companies, trying to step up to the plate and meet some of this lithium demand that's coming.
Okay, Alina. Tim, let's move along to you and to day two of the keynotes. I had the pleasure of introducing Paul Brink, CEO of Franco-Nevada. I've interviewed him a couple of times. He had some big shoes to fill, as you know, when he came in 2020 as CEO, although he had been there since the IPO in 2007. Big shoes as in David Harquail, who previously ran the company, and then going way back, previous iterations of the company, Pierre Lassonde and Seymour Schulich. So they're the king, basically, of royalty and streaming and precious metals. What is it that they do well, and what is it that stood out from his presentation?
Yes, indeed, Mark. During his talk, Mr. Brink highlighted the success Franco has had in generating shareholder returns, building up its portfolio that now includes over 400 royalty and streaming agreements. This business model has some distinct advantages, as it's less affected by rising costs or volatile commodity prices, which has made Franco-Nevada a relatively stable income generator. Mr. Brink highlighted that the company has increased its focus on streaming agreements, which helps finance projects to move them toward production. And the company has a diverse portfolio with royalties on projects at various stages, including over 100 producers. As well, they have both precious and base metal projects, helping keep revenues strong through different commodity cycles. Mr. Brink also highlighted some of the individual successes Franco has had, including telling the story of how they initially acquired the royalty on Detour Lake, which is now a major producing gold mine. Another indicator of the company's success is that it has built up a large war chest that it is looking to deploy. This includes $1 billion in cash, bolstered by a $1 billion credit facility. Now, during the Q&A session, one question that came up was about recent M&A activity among royalty and streaming companies. Mr. Brink considered this to be positive for Franco, as there have been quite a few new companies entering the space in recent years. And this has created increased competition, resulting in bidding wars that have driven up the cost to buy royalties. Another highlight from the Q&A session was about diversifying into lithium and rare earths. Mr. Brink said they are interested, but there are some differences in evaluating those projects, particularly assessing extraction and metallurgy. Nonetheless, we should not be too surprised if they start dipping their toes into those commodities as well.
All right, very good, Tim. Thank you. Now, in terms of the keynotes, and this is day two as well, we may be saving the best for last. David Rosenberg Taylor, founder and president of Rosenberg Research. He didn't disappoint. A bearish message, as we can imagine from him. He was also very entertaining. Two lines that stood out for me. He said central banks opened their bathrobes to zombie companies and gave them tons of money. That was sort of an eye-opening comment. And then the Fed has your back. Yeah, and there's a knife in it, and they're twisting it. So, what were your main takeaways from David Rosenberg's presentation?
Yeah, in terms of Rosenberg, he's very much a perma-bear, and he had a rather gloomy outlook on the state of the market. So he really did start out by pointing to the fact that the U.S. Fed is a central banker for the world, and when it starts to tighten, the rest of the world follows suit. So as we know, the Fed started tightening last March, and the aggressiveness of the current tightening cycle is nearly unprecedented. He noted that of the 14 rate hike cycles since the 1950s, about 80% ended in recessions, while 20% resulted in slower growth rather than a recession. So he really doesn't envision a soft landing ahead. He also hammered home that the Fed has been overly focused on the demand side while ignoring the supply side. He emphasized that U.S. real GDP growth remains unchanged prior to and post-pandemic era, and that recent inflationary pressures were supply-driven. Specifically on commodities, he believes pandemic-induced supply constraints have eased and that commodities retreating are a deflationary signal. Granted, we don't believe his analysis factors in the massive demand for green metals we'll need to meet future electrification goals, nor does it factor in the demand for critical minerals and when they're mined and where they're mined and processed, a key consideration brought on by recent geopolitical events. So our outlook on commodities is quite bullish in contrast to his.
All right. Thank you, Taylor. You're listening to Red Cloud's Fall Mining Showcase Research Roundtable Roundup. So let's move along. We're going to get some of your top ideas in a while, but we want to drill down on some of the company presentations that you moderated at the event recently. We're going to start with, and basically just find out what you found compelling, what stood out for you. We'll go back to David here. Arizona Sonoran Copper. I had a chance to interview the CEO, George Ogilvy. So it's a brownfield copper project. They're aiming to have to be in production by 2025. What is it about Arizona Sonoran Copper that stands out for you?
Yeah, Mark, that was the first time I ever met George myself as well, and was introduced to the Arizona Sonoran Copper story. And it did impress me. You know, we don't rate or recover the stock, but they are advancing the past-producing Cactus Mine and the adjacent Park Slayer deposit in Arizona. Now, these are two large copper porphyries. They host about 6.5 billion pounds and 2.5 billion pounds of copper, respectively. They do have a PEA out. It suggests about over 1 billion pounds of copper production over 18 years life of mine. But the company has partnered with Rio Tinto to try out Rio's relatively new Newton processing technology. And this could help unlock additional primary sulfide copper that isn't currently in the mine plan. So focus is going to be remain on testing there, met testing. It's going to be followed by a pre-feasibility study and feasibility studies. So de-risking that story and growing it is really the name of the game.
Right, and not to pick out one CEO over the other, but when you meet them, sometimes there's a presence to them and a body language, and you could tell George Ogilvy, he's been around and he knows what's going on, and I just got a good sense about him. You agree?
Yeah, absolutely. It comes out to confidence. You know, I think some people just they portray that they exude more confidence than others, and I think investors, especially when you're meeting them face to face or in the same room, I think that comes across with him and certain others.
Right, and very sharply dressed, as I remember. All right, let's move along to and go back to Taylor. So Scotty Resources exploring for multiple gold and silver properties in the Golden Triangle in BC, and they're also doing what a lot of companies are doing these days and bringing modern technology to the fore. So what are they doing, and what impressed you about them?
So for Scotty Resources, which we don't currently rate, a couple key things stood out to me. They're really focused on their Scotty gold mine project. So at that asset, the infrastructure and proximity is quite impressive. You know, there's a 4-season access road, an electrical transmission line under 1.5 kilometers away. The Port of Stewart's close. There's existing portals, shafts, and drifts, and a rail system. So infrastructure is really top quality here for the Golden Triangle. The second main thing that stood out was just the consistently successful drill results that have been reported over the past several years. Looking, just at this year in 2022, they've done over 17,000 meters, and most of that's been at the Blueberry Zone, where they recently reported an intercept of just under 10 grams per ton gold over 25 meters. So that's a nice standout intercept from that drilling. The other thing I'd note is, Scotty just repurchased all the royalties on that main asset, so that really unencumbers it and provides optionality for the future. So this is really one I'll be keeping my eye on going forward.
All right, thank you, Taylor. It's funny you mentioned the Blueberry Zone, because now we move to Tim and Oh My Gold Mines, and if I'm not mistaken, Tim, they have a Blueberry Hill property that they're planning to get to and drill. Now, I had the pleasure of interviewing Elaine Ellingham, the CEO. So they're basically drilling below two formerly producing open pit mines in Guyana. Is that correct?
Yes, indeed, Mark. Oh My Gold Mines has the distinct ticker of OMG on the TSX Venture. As you mentioned, Oh My is a past producing mine. And an old saying is that the best place to search for gold is in the shadow of a headframe. While Oh My was an open pit mine, the same principle applies. While the past operators moved on, and they literally moved the mill over to another project, they had not mined out all the gold. Oh My Gold Mines has had significant success revisiting the project, delineating about 3.7 million ounces of gold in resources, coincidentally about matching the historic production. And there still appears to be more exploration upside, as Ms. Ellingham and her team have identified more targets yet to drill.
Okay, thank you, Tim. Let's go back to Alina. You mentioned Brunswick exploration a while ago. So they say they're aggressively exploring for lithium in Quebec and Atlantic Canada. And this is the management team, or at least part of it, that discovered the Malartic gold mine. So is that background part of the big appeal for this company? They've been there, done that. They've done it before.
Well, yes, Mark, but it's also more about their strategy than it is about management's background. We don't cover Brunswick, so there's no rating and target price. But like you said, Mark, yes, management has done this before, but what we were impressed by was their approach to exploration, since they're one of the first to actually conduct grassroots exploration. Most of the current lithium deposits in the world that are being advanced right now were known about historically and were actually discovered by accident when looking for other metals. So Brunswick's strategy is simple. They stake land in an area that is known to host pegmatites and test as many as possible, looking for lithium content using an XRF gun, which allows them to identify certain geochemical markers. So what this really does is allows them to make a decision on the field on whether to move on to the next phase of exploration or move on to testing another pegmatite. So management strategy is really a numbers game. The more pegmatites they test, the more likely they are to make discoveries and generate for further advancement. This is exactly what they've done at, they don't refer to it as their flagship project, but the Hearst project, where drilling is now planned for next quarter.
Okay, thanks, Elena. So those were key takeaways and what impressed our analysts in terms of their presentations. Now we get to some top ideas. Back to David here. Global Atomic, they have an advanced uranium project in Niger. They've announced about $250 million in offtake agreements so far. Export Development Canada investing $75 million. Those are some of the highlights. What else impresses you here?
Yeah, we really like Global Atomic. It has been our top uranium pick for a little bit right now. We have a buy $7 target, and it is a banking client of Red Cloud. But they just started construction of its underground ramp at Dassa in Niger earlier this month. This is the largest uranium mine currently under construction in the world. It's amongst the highest grade in the world outside of the Athabasca Basin. And Positive Exploration recently has combined some zones close to surface, which should extend their phase 1 life of mine. So we expect resource and reserve updates following a new mine plan in a couple of months. You mentioned the offtake agreements. I think that's just scratching the surface here. And there are talks with the banking syndicate that are in the final stages. So management is also in final discussions with Orano. with respect to shipping development ore to Orano's nearby processing facility. And this could really provide some near-term cash flow, ultimately help the company fund its own processing plant. So a lot more news to come from Global Atomic.
Moving along to Taylor, you've got an idea for us in Aris Mining. There's a lot going on here. The combination of GCM Mining and Aris Gold. It's a producer in Colombia. It's got another mine in development. And it's run by Neil Woodyer, founder of Endeavor Financial and Endeavor Mining, and on and on. He has a very impressive background, correct?
Yes, very much so. So Aris Mining, we have a buy rating and $11.50 target price there. Aris is also a Red Cloud banking client. So that company, as you say, is led by a high quality management team there. They have a roster of mining industry veterans that have successfully built companies in the past, counting among them Leia Gold. Aris really has a strategy in place to grow its production profile to over 400,000 ounces of gold annually by 2025. And it has a portfolio of assets that can get it there and beyond. Two I'd mention that there were kind of recent highlights at the presentation at our fall mining showcase were one, Segovia. So that asset's reliably producing over 200,000 ounces of gold per year, and its Q3 results were right in line with our expectations. The second is Marmato. Aris recently released a PFS for that asset. You can refer to our research note for all the details on that, but two key items there was the extension of the life of mine to 20 years, which is up from 14. As well, they put out an updated CapEx number that only increased modestly to $280 million. Previously, it was $270 million. I'd note that that CapEx number is also fully funded right now. Don't have time to discuss them right now, but Aris also has interest in the large Soto Norte project, formerly of Ventana, as well as the Toro Peru project in Guyana. So I think this is a story to watch that's poised for significant growth as it executes on its vision. I also think Colombia is a jurisdiction that's been wrongly dismissed by the market. It's starting to be clear that the rhetoric during the past presidential election this year was just that, rhetoric. The government appears to understand that mining is a critical component of electrification and its green ambitions for the future. Mining could also help plug the hole in the country's GDP created by restrictions on fossil fuel extraction, which has been the focus of the new government. So watch for good things to come here.
All right. Thank you, Taylor. Tim, on to you. Your top idea is Aston Minerals. It's listed in Australia. They're exploring for nickel and cobalt in Ontario. What else should we know, and why is this a top idea for you?
Yes, Mark. We have a buy speculative rating on Aston, and the company, I will say, is a Red Cloud investment banking client. During his presentation, Dale Ginn, the company's managing director, spoke about the company's project in the Timmins area. Now, the project was known to host gold, and the company has drilled up a sizable open pitable gold deposit with some high-grade pockets. But while drilling, they also encountered nickel. On the nickel side, they have completed an initial drill program delineating the Bardwell deposit, which is one of several targets along a sizable system of prospective host rocks on the property. Bardwell has characteristics similar to Mount Keith, which is a major nickel mine in Western Australia. Another target they plan to drill is called B2, which might actually be higher grade based on initial observations. The company expects to have an initial resource estimate for both Bardwell and the gold deposits coming up in the next few months, and there's still significant exploration potential on both fronts.
Tim, just a quick follow-up. Aston Minerals listed in Australia, as mentioned. Is that a drawback in the short term in terms of getting awareness in the Canadian market? And do you know whether they have any plans to list in Canada?
It's not generally a drawback, although some investors may be limited in their ability to invest in Australia, but it is certainly a strong place to list for mineral exploration companies. And they haven't specifically said they plan to list in Canada. I think it's something that might be an option, again, to potentially open the door a bit to more North American investors.
Okay, thank you, Tim. Back to Alina, E3 Lithium. highlights here is that they have an inferred resource at their Clearwater lithium project in Alberta. They're planning to use direct lithium extraction. Imperial Oil is an investor, and the management team seems quite experienced and impressive. Can you explain just for me and for everybody else, what is the oil and gas tie-in here? Isn't there some sort of anyway, so maybe you could explain it.
So like you said, Mark, it is all of the above. Resource, the fact that they're backed by a big name like Imperial Oil, and their DLE technology. But, we do have a buy rating and 820 target price on the stock. And just to clarify, Clearwater is only part of the Alberta lithium project, which is host to the 24.3 million ton LCE inferred resource, which to our knowledge is one of the largest lithium resources in the world. So as you pointed out, Mark, E3 is developing its own direct lithium extraction technology, and recent results from a pilot plant have shown very encouraging results with 97% of lithium recovered while removing 99% of the impurities. It is also backed by Imperial Oil, and Imperial is going to provide technical support and allow E3 to access its land for further exploration. Additionally, Imperial has invested $6.3 million into E3, which we view as a major stamp of approval on the project and the company. So in summary, E3 does stand out from the crowd. It is developing its own tailor-made DLE solution to Western Canadian petrobrines. It's the first to attract big money to the lithium space, and is also the first to drill a test well in Alberta. And just initial results from that test well have shown that the grades are in line with its resource grade, further validating the assumptions that the company has used in the PEA.
All right, so very, very good. Let's go around the table here for our wrap up and our final thoughts. And let me kick it off. Just generally, anybody can take this. But one thing that struck me in the interviews I was doing was with Stephen Hansen from Acme Lithium, who two of his biggest concerns are that EV makers may eventually not be able to meet their production targets, and that non-Western lithium producers may limit supply. And he calls that supply of lithium is of crisis proportions right now, just generally around the world and more so in North America. So any thoughts on that?
Yeah, I think that's a big concern right now. We do see sort of a breakdown east versus west in a lot of the procurement of the raw materials right now. You're really seeing it in the lithium space. And, I think various Chinese entities have been buying lithium projects for several years down in South America. And we have seen the trend continue. There's been investment in various projects and companies that are Canadian based as well. And very recently we saw the Canadian government acting on its new critical mineral strategy, actually ask 3 Chinese companies to back out of 3 Canadian lithium companies, which was a pretty bold move in my opinion. First of all, there were a couple of very small companies involved. And then there was also a company that had a project that was overseas. Actually, a couple of them that have projects overseas. So, in my opinion, I think maybe the Canadian government is overreaching a little bit when it says, Chinese investment can't touch Canadian companies that are working on, let's say, Argentinian assets. I don't think the government of Argentina will like the Canadian government poo-pooing investment in its own jurisdiction. I can understand from maybe a Canadian deposit aspect, but it just comes down to the incredible demand that is out there by various jurisdictions in order to make sure there's enough raw material for the battery makers, for the EVs.
And some of these smaller companies feel they're being picked on because a lot of the bigger companies, like say a Tech, they're allowed to keep their Chinese investment that they've had for many years.
Yeah, I don't think investors or even probably the Canadian government realized how pervasive Chinese investment is. I think a list of 40 some odd companies came out since that decision. And, some of these companies that actually had to, I guess, release Chinese investment, are sub $20 million, and the investments are like $1.5 million in one case. So yeah, they do feel picked on, whereas there's much more impact at larger scale.
Taylor, do you have some final thoughts?
Yeah, I moderated a lot of the gold sessions. So, my comments are kind of reflecting those in particular here is, those sessions were very well attended. I've been to quite a few of the big conferences this fall. Turnout wasn't great in those. You saw an uptick in the base metals, and then, the uranium and lithium sessions were quite well attended. But I'd say that stood out to me at the Fall Mining Showcase was, the gold sessions. They all had, a solid amount of people in there. So I think it's a testament to sentiment picking up in the space, and people are taking an interest again. So that was kind of positive for me to see, as a lot of my coverage is in the gold space. So, I'm encouraged.
Right, and the gold price seems to be ticking up lately, and there's a lot of thought that when interest rates and government bond yields start coming down meaningfully, then gold might have a nice run.
Yeah, we'll see what happens. Rosenberg had the opposite view. We're going into stormy times over the next 12 months, but who knows?
Although he did, in a recession scenario, he did say one of the things that could do well, you could hide out in some gold and I guess government bonds, and there was one other asset class, and I'm forgetting now. But anyway, we'll see.
I think it was high yield blue chip dividend.
There you go. Yeah, exactly. A dividend aristocrat. That's right. Yeah, right.
I do think he was talking about the broader markets in general. I don't think we've ever had a situation where we've been talking about security of energy supply and the electrification of everything. So, while we may see that, impact the broader markets, I do think we are still looking at a bull market here for several critical elements, specifically those that are important for energy independence, electrification of everything, battery materials, and so on.
Right. Can I just play devil's advocate? The consensus is that the world is shifting to electrification. We have a scarcity of battery metals. Can we poke holes in that story? What if we get to 2030 and it doesn't turn out the way everybody says it's going to turn out?
I don't know if it's going to turn out like we anticipate, or are we going to have 100% EVs, just call it 8-10 years from now? Probably not. I think a lot of jurisdictions are calling for the ban on ICE vehicles by 2030, and that might be pushed off by subsequent governments. Who knows? Certainly, we look at the growth profiles, and we are seeing very strong year after year growth in EV penetration. So that is something that is happening. Every manufacturing company out there, vehicle manufacturing company, is pushing it forward, and they've got massive R&D budgets. In the, I believe it's $60 billion per year that they can spend as they're pushing towards here. And these are brand names. They're not going to keep kicking the can down the road. They're actually going to get things built. So, yes, prices will probably be a detriment to how much penetration there is into the market, and it'll probably mean that the prices of vehicles go up, not down. I don't think EVs are going to get cheaper. I think they're going to go up like every other vehicle. So if anybody that wants a vehicle is just going to have to pay up, whether it's electric or not electric.
Alina, final thoughts?
Well, just one thing I'd like to clarify what Dave was talking about. The R&D spend for $60 billion, it's a combination of the 5 largest automakers, includes Ford and GM. But, just going back to the conference, one of the interesting things for me, and I sat in on a lot of the nickel and lithium presentations, was the question surrounding community relations and environmental considerations, less so about the economics of the projects that companies were presenting, but people were curious to know how these companies are managing some of their relationships with First Nations communities and so on. So that was just a takeaway for me.
Right. So that's the G in ESG.
Yeah.
Right. And that's, as you were talking, I was thinking that's a much bigger conversation. I'm sure we'll have it again, if we'll pursue this further down the road.
Yeah, that G holds high esteem in the uranium sector as well, especially in Saskatchewan.
And then last word will go to you, Tim.
Yeah, overall, it was a successful conference. It was great to see so many people out with so many companies presenting, and kind of on a personal note, it was great to catch up with people. Good to have an in-person conference and catch up with some people I haven't seen literally in years in person, and it's both the presentations and the formal talks, but also it's the informal conversations over lunch or in the hallway that is able to hear about some new stories and meet some new people as well. So definitely it was quite good to have an in-person event.
That's for sure, Tim. And I'll just wrap it up by saying I've only been with Red Cloud for a few months now, but I saw all the emails going back and forth and the event come together. And it was obviously a very big undertaking, but I really enjoyed it. It was clearly very successful, well attended, and as Tim mentioned, lots of great conversations. So everybody got a chance to meet people and put faces to the names and so on. So it was excellent. Thanks all for doing this. Very good, and we'll talk again.
Thank you, Mark.
Thank you.
All right, you've been listening to the Research Roundup podcast, Fall Mining Showcase Roundtable Edition. Thanks a lot for listening, and we'll talk to you next time. Take care.
Thanks for listening to the Red Cloud Research Roundup. We hope you enjoyed this episode. Remember to tune in every week for new episodes. And as always, head over to redcloudsecurities.com for full disclosures and to sign up to our email list. Thank you so much, and see you next time.